Imagine a world where billions of dollars change hands every single day, where hedge funds, Wall Street analysts, and the smartest financial minds fight tooth and nail for every advantage. And yet, despite all this competition, there is one man who has consistently beaten them all for 6 decades straight. No flashy headlines, no wild bets on cryptocurrencies, no market timing gimmicks. Just one man, quietly reading annual reports, studying businesses, and making decisions that Wall Street never sees coming. That man is Warren Buffett, the Oracle of Omaha. Some call him a genius, others call him lucky. But the truth is far more fascinating. Buffett's success is entirely by design. While the world chases trends, panic sells, and blindly follows the herd, Buffett does the exact opposite. He watches the chaos, calculates calmly, and lets the world's impatience create opportunities for him. Today, we're diving into how Warren Buffett outsmarted Wall Street for 60 years, how he turned patience into power, principles into profit, and knowledge into an empire. We'll go inside the decisions, the mindset, and the strategies that allowed one man to outperform generations of professional investors, and why Wall Street still can't catch up. Early years, the making of the Oracle. Warren Edward Buffett was born in 1930 in the heartland of America, Omaha, Nebraska, during the Great Depression, a period when financial ruin was common and dreams of wealth seemed nearly impossible. But Buffett's upbringing was different. His father was a stockbroker and later a congressman, giving young Warren a window into the mechanics of markets at a time when most children didn't even know what a stock was. Buffett's curiosity went beyond ordinary childhood fascination. By age 11, he purchased his first stock for $38, learning the thrill of ownership and the intricacies of the market. By 16, he was filing his own tax returns, running small businesses, and absorbing the wisdom of books like Benjamin Graham's The Intelligent Investor. Unlike his peers, Buffett didn't chase trends or want fast money. He was obsessed with understanding real value. This obsession would become the core principle that guides every single investment he makes, even today. He saw patterns where others saw noise, opportunities where others saw risk, and potential where others only saw uncertainty. This mindset, developed in the dust of the Great Depression, shaped by early exposure to finance and sharpened by relentless reading, was the foundation of the man who would go on to beat Wall Street for 60 years. The principles that outsmarted Wall Street. Buffett's approach seems deceptively simple, but simplicity has been his greatest weapon against the complexity, hype, and chaos of Wall Street. Value investing. Betting on substance, not speculation. Buffett doesn't buy stocks, he buys businesses. He looks for companies with durable competitive advantages, predictable earnings, and trustworthy management. While Wall Street reacts to short-term news and quarterly earnings, Buffett focuses on intrinsic value. During market crashes, while traders panic, Buffett calmly acquires stakes in undervalued companies. Coca-Cola, American Express, and Geico are perfect examples. Multi-decade investments that compound quietly, consistently, and powerfully. 2. Patience as a competitive advantage. Buffett treats time as an ally. While others obsess over market swings, he lets compounding work its magic over decades. He famously said, "The stock market is a device for transferring money from the impatient to the patient." While traders flip stocks daily, Buffett's long-term vision turns volatility into opportunity. 3. Circle of competence. Avoiding traps. Others fall into Buffett invests only in what he understands. Unlike traders chasing hot tech stocks, he avoids industries he can't evaluate confidently. During the dot-com bubble, while millions lost fortunes, Buffett stayed out, waiting for opportunities he could fully grasp. This clarity has allowed him to make fewer mistakes, focus on high-probability investments, and capitalize on market inefficiencies. Execution. Moves that left Wall Street stunned. Buffett's genius isn't just in philosophy, it's in relentless execution. Over 6 decades, he has repeatedly made moves that left professional investors baffled. Berkshire Hathaway transformation. Buffett turned a struggling textile company into a global investment powerhouse. Analysts saw a failing mill. Buffett saw a platform for capital allocation. Today, Berkshire Hathaway owns hundreds of companies, from railroads to insurance to consumer brands, all generating cash to fuel new investments. Crisis investing. In 2008, the financial world was collapsing. While hedge funds were failing and investors panicked, Buffett invested billions into Goldman Sachs, Bank of America, and General Electric, often securing terms that guaranteed returns regardless of market swings. While others feared collapse, Buffett seized opportunity. Insurance as a launchpad. Buffett understood early that insurance offers a unique financial advantage: the float. Premiums collected before claims are paid give immense leverage for investment. Using this float, Buffett was able to invest billions without borrowing, creating a compounding capital engine unmatched by competitors. Avoiding leverage traps. While Wall Street thrives on borrowed money, Buffett has historically avoided excessive leverage. This discipline allowed him to weather crashes when leveraged investors collapsed. When the market fell, Buffett could buy assets cheaply, turning market panic into profit. The psychology of winning. Buffett's most underestimated advantage is psychological. Wall Street is driven by emotion. Fear and greed dominate. Buffett thrives on rationality. He follows the principle: be fearful when others are greedy, and greedy when others are fearful. While traders panic, he calculates. While analysts chase trends, he waits. While journalists demand instant results, he ignores the noise. Independence of thought is a superpower. Buffett doesn't care if his peers disagree. If an opportunity fits his criteria, he acts decisively. Over decades, this emotional discipline, staying calm, rational, and confident under pressure, has compounded into profits far greater than any temporary advantage gained through market timing or speculation. Legacy and lifetime lessons. Warren Buffett's 60-year career is more than wealth accumulation. It's a lesson in discipline, focus, and ethics. Despite being worth over $100 billion, he lives modestly, drives his own car, and maintains clarity of purpose. He teaches by example that wealth is not about indulgence, but about compounding knowledge, capital, and patience. Buffett also demonstrates the power of restraint. While Wall Street reacts to every headline, Buffett waits, observes, and acts only when the odds are in his favor. He proves that the path to enduring wealth isn't flashy. It's rational, disciplined, and steady. Buffett's story is proof that success does not require being the smartest person in the room. It requires clarity of thought, emotional discipline, patience, and the courage to act when others hesitate. In a world obsessed with instant results and volatility, Buffett's consistent approach remains an unshakable model of long-term success. The Oracle's enduring power. For 60 years, Warren Buffett has outsmarted Wall Street not by luck, timing, or gimmicks, but by thinking differently, staying patient, and mastering human psychology. He has turned discipline into dominance, knowledge into wealth, and patience into power. While others chase the next trend, panic in downturns, or gamble with speculation, Buffett stays focused on intrinsic value, compounding, and long-term success. In an age of AI trading, meme stocks, and high-frequency algorithms, Buffett's timeless principles, patience, rationality, and deep understanding remain unmatched. He didn't just survive Wall Street's chaos, he thrived quietly and consistently, leaving a blueprint for anyone willing to learn from the Oracle of Omaha.